Hey folks, and welcome to the Pipnotic Symposium for the 19th of June 2023. So if we have a quick look at this, this is a continuation of our last video where we spoke about these levels just here. We put a couple of lines on these, and they look like this. Let me zoom in a little bit. Okay, so we had this area here. Okay, this is where price released. And this is an important area because we had this. It was tested several times, and then price moved through it and removed it. So the area remaining responsible for it was this one here. Price tested. This is completely predictable behavior. Then prices move away. Okay, we would expect prices to go initially to here, which they did pretty much here. And then they formed another area of here of distribution before prices finally broke down. And so if we look at this, we had this one here where we'd expect prices to come to, but we also have this kind of period of agreement in supply and demand. Then we have this imbalance that occurs from here. Okay, so the origin of that move is in here, but looking at that, it's a difficult one because you don't really know what prices are going to do. So let's actually go to a daily chart. No, it doesn't give us any clarity. So here on this one, you can just see that we had a period of sideways price movement. Okay, we had this is the origin of that move. Oops, come on, just here, and then we had another departure. So I already marked that off, which is this one just here. Okay, prices came down to the area. We tested this area several times. Let me mark that area off. We've got micro demand just here. Tested. We went through it. So that's good. That's telling us that this is gone. So we can expect any following tests to move through it. Okay, so when prices move through an area, that's telling us that the pancakes on that plate are gone. Okay, so prices came to that area and then we moved through. We established the sell zone. Price came to the sell zone, a little bit beyond, and then we cut through and moved beyond that. Okay, and so we were thinking, is it going to be this area here or this area here? Okay, so if we have a look at this on the hourly chart, you can just see, I think it was maybe the hourly chart that we were looking at. I don't remember, but we have this period of agreement. We have another period of agreement. And so it's just an expectation that when prices leave these areas of agreement, that they come back to them. And they often do. Okay, we had this one here, prices left. We came back to it almost. We missed our entry by 10 pips, 5 pips or whatever. Okay, but this is super expected behavior. And so when you see stuff like, they have to be clear, of course, when you see stuff like this, or this is a micro one, or you have something like this, or this, okay, or you have, here we have 2 levels, maybe even more, maybe something like that. Got a couple of nested areas in there. When you see stuff like that, I mean, it's the expectation that price comes back to it. Price left here, we came back to it, we moved away. Okay, price left here, we came back to it, we moved away. Price left here, we came back to it, and we moved away. This is super predictable expected behavior. Okay, so when you see these little sideways price movements, like so, price comes up, we move sideways, and then we leave. I mean, we can expect price to come down to this area in the future and react. And so essentially what we're doing is we're trying to find this precise pattern where you can see these departures and these revisits and then the reactions thereafter. And this is a very beautiful pattern here because this is just a very clean pattern on the 1 hour chart. I think maybe without looking at the video from the 13th, looking at this one here, I mean, would probably be somewhere around here because this is where prices came back to. So this is just an expected area, but if you box off the whole area, it would look something like that, or it would just look something like that if we followed it all the way along. So again, we've got that box. We send it into the future. We got another box. This is a bit of a tricky one, but if we take from the top of this kind of main area of trading, we send it into the future, we would expect prices to move into and away from these areas, which they did, and they almost always do. Okay, so keep that in mind. One thing as well that I think is worth noting is that is when you see these areas, it's quite important to focus on something else that we spoke about, and that is an area, we want to see an area where prices has had a really difficult time moving beyond. We tried, failed, we go away, we come back down, and then we break that area. This is the area, this is a level. And likewise, we have here, price kind of blasts through this area. We kind of we seek liquidity, we kind of rebalance, and we kind of stabilize. We kind of move down, fail, kind of move through, fail, and then we cut through. This is the area. Okay, and then you have a couple of things here where you have this one here, price comes down, fails, moves down, fails, then we cut away, and price comes back to that area. In the future, we move through it, now it's dead. And now, what we have this price tries to go up, we fail, we try to go up, we fail. What's price going to do now? Well, we don't know for sure, but what we can expect based on this and this and this is that price will likely do something like that. Okay, but we don't know for sure, but this is what we can expect. Okay, but notice as well that we are in, if we focus on the most recent price swings, we are moving lower. Okay, so that would make me feel slightly uncomfortable about buying, or it'd make me at least manage this trade very differently than if price was as if relative to a short position. Okay, so prices and that short position would be maybe something like moving up into this area and then moving away. Okay, not saying this can't work, but we're moving down currently, and so you might want to just trade in line with that. But on the major time frame, maybe things are looking a little bit different. Okay, but you can see here super clearly that, I mean, we've done the same thing here. We had attempt, fail, attempt, fail, attempt, fail, attempt, fail, move away, price, sticky, break. This is that area. Price kind of comes down to it, sits on it. Now we're reacting to it. So what's the expected price behavior? Well, I'm guessing that prices are going to go up without overthinking it. That's what I think will probably happen based on what we can see here. Okay, you see this all the time, all the time. Let's have another example. Let's just grab another. Doesn't even matter what it is. Okay, so if we look at this here, okay, we have a tiny one. This is a micro demand. Price goes up, we fail, we go up, we fail, we break through it, come to it, move up. Try, fail, try, we break through it. Expecting reactions. Okay, here, price breaks. Test it many times. Here we do another thing, we break. Expect reactions at this level. Price moves up, we move sideways. We test, we fail, we break. Expect prices to react here. Prices came up right here and then down. Then we moved away. Okay, here price goes up, micro supply, we move up, we come down, we succeed, come up, test that area. Prices move away momentarily. Test, break. We expect prices to react. They come, they bounce. Here, prices go up, we move away, expect prices to react. They go up and they do. Test, fail, test, fail, test, fail, test, fail. Break, expect prices to come back here, and they do here. Okay, prices go up, we move down, seek liquidity, test here, and then we blow higher. Same thing here, we break, expect prices to come back down here. Have they done that yet? No. Keep in mind, we're in a weekly supply. That's a big deal right here, the orange box. So keep that in mind. Doesn't mean you can't buy here, it just means that you have to be careful. Okay, let's do another example. Let's do pound American dollar. Okay, so here, do the same thing over again. Sideways price movement, price moves away. Price sensitivity expected in the future. Come to it, we move away. Okay, we have some pretty erratic reactions here, but we have price tests it once, twice, and then we move away. Here, we stabilize. We move away. Reaction, reaction. Price moves sideways. We move away. Tested, tested. Price stabilizes. Here we see a stabilization. This is probably micro value balance imbalance where price comes down, we move away. Tiny little area, price comes up, moves away. Okay, here we have another one. Price tests, fails. We break away. We test. We break away. We test right here on this candle here. We break away. Price consumes it. Why does it do that? Why does it do that? Notice here that this one is different than this one. And what's the difference between something that looks like this and something that looks like this? What's the difference between scenario 1 and scenario 2? What's the difference there? Pause the video maybe and think and look at these and think about what the difference is between those two. Okay, welcome back. I hope you had the time to spend on analyzing a price pattern like this, and a price pattern like this, which resembles something like this. The difference between pattern or price structure 1 and 2 is that this is efficient trading. All of these imbalances have been rebalanced. We have this one here then. Okay, price comes back to it. Okay, so we form another one just here. This one, we form this imbalance. Price does not come back. We form another imbalance. Price has not come back. So what's the problem? Why would buying here not be maybe such a good idea? The reason this is potentially a bad idea is because of this. Okay, I mean, this is a good thing in the similar way that this is a good thing on the release. The difference between this and this is that this is located at the base and this is located in the middle of a move. So if you were to take an order book and you go like this and you kind of go like that, and you have buyers here. Okay, I mean, are there buyers in here? Are there people who are looking to buy here? Maybe there are, but I don't think that there are going to be as many buyers as there is down here at the bottom of the book. Okay, you have to consider these price swings relative to where we have people who are willing to buy and sell, and people are obviously willing to buy at cheaper prices and sell at high prices. So you want to look at the basis of these moves for the big buying, and you want to make sure that if price does move away, you have to also kind of ensure that rebalancing has already occurred. This is super important because if you have an exposed leg like this, an exposed price surge or price movement, there's a void. This little price structure is void of liquidity, or at least it may have been historically. Okay, and so there's a natural tendency for prices to feed back into these little price structures that are typically located at the base of these price inefficiencies. Okay, so keep that in mind. This is pretty important, I think. And so looking at this, okay, so we rebalance this. This is that area. Okay, broke away, we visited. We came back to the origin, okay, of that move. Move sideways. We broke away, we came back. We moved up, we broke away, we came back. Okay, we moved up, we moved sideways, we broke away, we came back. Okay, we broke away. Have we come back? No, we have not come back. Okay, so this is rebalanced. This is rebalanced. This is rebalanced. This is rebalanced. this is not rebalanced. What does that mean? Well, that means that you can expect prices to move down to rebalance it and to react there. We just, okay, and so what that would mean essentially is that you would, if you were to sell here, you would expect prices to be reacting to something over here historically. Okay, and so this is what you want to see. You want to look for this balancing and this rebalancing. This happens all the time. We'll do one more example before we wrap it up. Okay, so here, let me zoom out a bit. Okay, good. So here you can see that we have sideways price movement, price moves away. Sideways price movement, price moves away. We revisit this one, still exposed. This will rebalance sometime in the future. Price movement, departure, rebalance. Departure, rebalance. Okay, sideways price movement, price bursts out, we move through, we accumulate, move away, we revisit. Accumulate, depart, we revisit with this blue candle here, this red candle here. But what do? We go back to the origin. We rally, accumulate, depart, we try to come back, we almost do it, not quite. We move sideways, we depart, we rebalance, we move up, we move into this area, we move away, we rebalance this one here, we move away, price imbalance, we revisit, we move away, price imbalance, we revisit, we move away, and we do not revisit. We have not revisited. So where's price going to gravitate towards? It's going to gravitate towards this, as well as this. Why? Price imbalance, price inefficiency. This is an inefficient market. Okay, prices must be efficient. This is actually, I believe, even it's a requirement that in order to be an entity who provides or establishes a market that others can speculate within, there are some requirements to that quote-unquote market maker, and that is that you create an efficient market. Okay, this is a requirement, providing a stable and efficient market for your customers. Okay, prices here, we move away. Boom, we test one time, we move away. Test again, move away. Test again, move away. We go deeper. We move away, accumulate, we move away. So we're kind of screwing around here. Now we've got this up here. We need to rebalance this. We need to rebalance that. So what we want now, we want price to come back here and expect them to move higher, or move up here and expect them to move down here to rebalance this. Okay, so they're always linked together like that. Anyway, so spend a little time. If you have like a little drawing tool like this, it really helps. I use Camtasia because that's what I do for my screencast. But you can get these screen drawing softwares that are really cool, and they enable you to do this, and it just really helps you kind of move through examples like that. Okay, so give it a shot. I hope this made sense. If you have any questions, please do let me know, and thank you for watching.